Hello, chart watchers and Decision Point faithful. Welcome to this Monday, February 3rd, 2020 Decision Point show with your hosts, Carl and Erin Swenlin. For those of you joining us for the first time today, welcome to our show. I hope you join us every Monday at noon Pacific, 3 p.m. Eastern, right here on StockCharts TV. So let's go ahead and get started and look at our agenda. But I do want to welcome my father, Carl Swenlin. How are you doing?
Recovering from wall-to-wall Super Bowl.
Well, did you have a favorite commercial?
I actually didn't see any of them. It
Then
was
you
just
probably
all the
didn't see
news
much of.
coverage was just background Super Bowl. It was crazy.
Yes, it has been for a while. It's
Yeah, in fact, it's all coronavirus on Friday, and then apparently that's all been cured because I didn't hear anything about it all weekend.
That's true. There was only
Right.
basically 1 to 3 items of news, and that one did fall pretty far. We'll go ahead and we'll talk a little bit more about that today. Just some of our thoughts regarding what's going on with that. We'll take a look at today's market, what the market action, and give you our thoughts on the big four: dollar, gold, oil, and bonds briefly. I'm going to focus on the materials sector a little bit. The materials, a bunch of them have been landing at the top of our the ETF tracker that we use to see which of the major ETFs, which direction they're going. And I've been noticing and watching that the materials sector has started to perk up, at least showing at the top of that summary a lot. And today it did as well. So I thought I'd look a little bit into the materials sector and a couple of those stocks within. And we'll talk, of course, a little bit about DecisionPoint.com, our new venture that we just started this month. And then as a bonus, I know that Carl has quite a few charts in his grab bag, things that he's thinking about and wants to talk about. So we'll finish up the show with that. But let's go ahead and dig right in.
By the way, we started up last month. It's February now.
Didn't I say February?
No, you
Or I
said
said last month and it was okay. All right, let's get my head in the game here. I thought I'd look real quickly at our sector scoreboards just to let everybody know what is going on. And like I said, I'll be talking about materials, which just recently went on a neutral signal. So as far as our intermediate term trend model, so we'll talk a little bit about that. All right, so let's go ahead and did you have a particular chart you wanted to look at for the discussion on the coronavirus in China? I can't remember if you had one or not. Hello?
no.
Oh, there you are. Did you have a chart you wanted to show on China, or just want to have a discussion?
A discussion. I don't have a chart.
Okay. I'll just take us over here because I can. Give me a minute. I know we do have a chart that I will throw out here with the global indexes, just so while we're talking about it. But I know, like I said, we haven't heard much news out of it. China has already been struggling here. We've got oil prices, that we're considering what's going on there as well. So I know you had a few thoughts about this.
Right. It's we're not getting. I'm sure we're not getting the true facts out of China. I mean, I can't prove it, but that's my genuine belief. But as far as the deaths, there's still not that many per se. I mean, of course, it's sad, and but the fact that is during the flu season in the U.S., we typically have about 40 or 50,000 people die from the flu.
True.
And so right now it's not that serious, but obviously by the way they're reacting, it is has the potential to be really a problem. So
yeah, I'll have to see how the markets take that news when we start to see more maturity in what's going on with the whether it's a true epidemic, what level is it going to be? All right. Well, let's go ahead and take a peek at what's been going on in the markets today. I have the 4-month candle, but I know that you also do. So I'm going to pass the screen over to you so you can use yours unless you want to talk about the one I have here. I think you had some better annotations on yours from Friday.
Yeah.
So go right ahead and grab it.
It's always takes me longer than other people. Okay. Let's see. I'm looking for that chart, and I'll just have to.
Like I said, we're
Okay.
going to get them all in the one chart list. You're just going to start clicking through.
Yeah, I wasn't prepared. Okay. Yeah, looking at today's action, this is what you would call a shooting star, but I don't really count it like that in this group in here. I'm not an expert at candlesticks, though, by any chance. But it would be more convincing if it was up here above the, if we had an up day like today, and then it ended with that shape, but with the head right up in here. So I still think that this is a problem. We're getting a lot of volatility in here, and let me just go ahead and change to 7 months. I tried that, and if you see, we're getting activity like we had here, like in here. So this is liable to continue for a while. Did you want me to cover some of those other?
Why don't you look a little bit at the big four, since we're kind of looking at today's market, and we can get some discussion on that. So I mean, I don't know. We try and keep it, I keep up with what Carl says, and we follow, and we do tend to be pretty much right on track together. So I know I've been looking for the dollar to continue rising and gold to continue rising. What is it looking like to you right now?
Today it was down 550. The gold.
Mm-hmm.
Let me look at the dollar. So that was up. That's pretty much why gold was down.
Yeah, it looked like it came down and tapped on the top of that bullish falling wedge. I've been waiting for it to do more than that, but it just hasn't been.
It's a pretty severe pullback to the line, but now it's got a bounce off that, so that's looking bullish, I'd say.
Mm-hmm.
Checking USO. This is something. Oh wow, it's really out of bed here, but it's the Saudis within a week have announced that they're trying to get the OPEC people to cut back production so they can get the price of crude up, and with that, that just had no effect. One of the things that I've heard is that China is also an issue in terms of the coronavirus, that they won't be they'll be shutting some stuff down for a while at least, and won't be placing demand on the oil market.
Well, we might see them rise. It's sure an important area of support that we're sitting on.
Yeah, we are. We can take a look at my.
Yeah.
This is a better range in terms of the basing pattern. I think that's what I would look for it to hold. Let's put it that way.
Mm-hmm.
I don't know. Okay, and then treasuries, of our 100 ETF tracker list, TL2 finished #1 for the week.
That's right.
Yeah. But I have no feelings about this at this point.
Yeah, I mean, it looks good. The momentum looks like it's going the right direction, but it is struggling a little with that high from October.
Yeah, and we haven't got updates on the interest rate yet
Today.
No.
But there we go with the 1 month and 3 month sitting. Their rates
Right.
are higher than.
I thought this was going to be an area of support, but no, we're below that now. I'd say well below it. So,
yeah. All righty, let me see.
And I had another chart that I wanted to look at. Let's see.
Sure.
Where it is.
Yeah, and it's funny because one of our viewers just wrote in, is it time to start talking more about those bond ETFs? Because those charts are looking better than some of the stocks right now.
Right. And that concerns me. I don't like to think of rates going lower.
Yeah.
We had a discussion. Well, let's do this a little later.
Yeah, let me go ahead. I'll start looking at the materials section.
Here, I've got this, the Silver Cross index for S&P 500, 400, and 600. And we'll notice that 500 is doing really well. 400 is not doing so well. It actually had a negative divergence ahead of the cardinal top here, and same with the S&P 600.
Yeah, they had just finally started to perk up, and they hit
right
resistance.
Had that little uptick there, breaking out, and then that's the end of that.
Yeah.
But let me do that. This is what I wanted to do. We had a discussion about this last week, but
a lively discussion.
Yes, and the subject was that
well, you mark your verticals typically on the cardinal tops.
Confirmations don't mean much. Okay. For example, we have this rising trend in here. This indicator confirms it. This indicator confirms it up to just the day before it starts breaking down. But this is not telling you anything. It says everything's fine internally, no negative divergences, but things can fall out of bed after that. And the fact, the more vigorous it's going up, the more likely it is you will have a confirmation and no divergence. And so you're kind of going blind. You're not getting the information. I just wanted to show that the way I do this is I track it along this way. Just keep moving it to the right, and I will move this line when we get another top. But just each day, you don't know what's coming after that, but it keeps track of the relationship between the price that is going up and the indicator which is going up. And if you look back here we have the cardinal tops, and you notice there are divergences showing up ahead of those tops. And that's what you're looking for. That is helpful. That's useful information.
Absolutely. And we both
Okay.
did agree on that, so. All right. Let me go ahead. I'm going to steal this screen now and start looking a little bit at the materials and the materials ETFs. And one of the reasons I want to do that is, let's see, right here. So we have this ETF tracker group of ETFs, and it's actually resident on StockCharts.com. It's part of our DecisionPoint trending condition chart pack that's free if you're an extra member or above. So if you wanted to take this same chart list and be able to, manipulate it and look at it, that's how you can do that. But I noticed you included it, Dad, in your weekly wrap, and I think I'm going to start including the top 10, bottom 10 in the daily Decision Point alert. That, of course, is for subscribers at decisionpoint.com. So if you're interested in getting the daily scoop on what is going on with the top 10, bottom 10 on this ETF tracker, we'll be including that in our Decision Point alert.
Or if you wanted to control the entire list, if you're a StockCharts member, and you can do scans on it, or etc.
Yeah, exactly. So I'm just going to I'm giving you kind of the skinny. So one of the things I have been watching is Palladium has been at the top of this list quite a bit over the past couple of weeks, and materials itself has been performing pretty well, but I thought it was just interesting, and I wanted to look at these a little more closely just because they did end up powering to the top today. As far as the ETFs that we follow, which are all pretty much the major ones, the industry groups in there, as well as the sectors and major indexes, you can see, as well as the equal weights. So it's a very robust chart list if you're interested in manipulating that. So anyway, I did set up a chart list real quick here. So I'm going to go right into that and show you what I've been looking at as far as that goes. So let's go back to my dashboard. I wanted to come here so I can get to my chart lists. I'm going to use one. It's called Scan Dump. It's just my transient chart list. I just throw things in there when I see it and I'm interested, but it never sticks around very long. Okay, so I think this was the materials chart we were going to talk about, Dad. This is the sector chart in general. And as you can see here in that thumbnail, we just got an intermediate term trend model neutral signal because the 20 crossed below that 50-day EMA, and that all occurred well above the 200-day EMA. So rather than go into a sell signal based on that crossover, we prefer to go into neutral, which is in cash or fully hedged, is sort of the idea behind it. So we're not suggesting shorting, I guess is the best way to put that. So anyway, mark the cardinal tops, just like you were showing on that previous chart. And, just getting an idea of what is going on here. Now, I noticed we had that double top up here, and it did end up executing. It didn't go all the way down to what I would have figured the target would have been, probably closer to this support area down here, but it never really, it came to that 200-day EMA. It was able to stop the bleeding, if you will. So it does look like it's ready to make a move back up to the upside, but we can see that in August, obviously in early October, price can certainly jump around up and below that 200-day EMA. So I wouldn't count on that necessarily, especially when you can see that neutral signal coming in. And look at how beat down a lot of, when you look at the silver cross, the materials index, that tells us how many of the members of the materials sector are on buy signals, where the 20-day EMA is above the 50-day EMA. So only half of them have that. But we are starting to see a little bit of improvement here. But overall, there's that confirmation we were talking about on the silver cross, and really on the other indicators as well. So let's look at a few of these. Palladium, like I said, was one of the interesting ones. And I actually sent this chart to you, Dad. I remember we had a quick discussion about it because we're always talking about parabolic moves. And this is like, it's almost textbook here. I mean, let me get a really fat blue line here. We could probably adjust this back here. Actually, yeah, I could definitely go back.
It's hard to bend it the right way.
Exact way, but you get the idea. You know, ever increasing slope is really how it comes up. And then of course the end is almost vertical typically. So I was looking at this, you know, it came up on the top and I thought, oh, wow, this must be a great place to be. And I came in and saw this breakdown of this parabolic. And so despite it being at the top of the list, you know, obviously huge correction for Palladium. We do now have a PMO sell signal on Palladium. You know, the scooter's been great because it's been in a parabolic move. But now you got that big gap down. You could look at this as an island. We did talk about that a little bit. You know, it is trying to make its way back up to close that gap. And, you know, we could make a case here once we see what happens of a flag type of formation here. But again, off of that large parabolic move, you can see just the failure when it did finally break down. But it does look like that 20-day EMA might be available for some support.
You know, it's one of the things about the intermediate term trend model is that's the crossover of the 20 and 50 AMA. Is when you get parabolic moves, that's just completely going to be worthless to you. You're going to have to figure another methodology for stopping yourself out. Because by the time it gets low enough to bulldoze the 50 and the 200, I'm sorry, the 50 and the 20 closer together, and when they cross, it could be way, way down.
Yes. Well, yeah, I mean, price would have to drop below the 20 just to get it to start moving in the downward toward that 50. And right now it's holding. But yeah, one of the things I usually tell people when they get lucky enough, and I say lucky because if you get in a parabolic move on a stock, I don't know, I'm usually really excited about that. But you do have to protect yourself because these drops can be really hefty. And one of the ways that I find that helps me is the trailing stop. And I don't usually set those, but when I'm in a stock that's starting to go straight up, a trailing stop follows you as you go up. And I did that once on a parabolic. And while I still had to take, you know, suck up some big loss on the big down day when it decided to collapse, I was still better off than a lot of other people who, one, had maybe set mental stops or certainly just, you know, hadn't moved their stop after, you know, it made that vertical move. But it definitely preserved a lot of my profit because I'm not going to tell anybody to get out of a parabolic. You just need to protect yourself.
Right.
And let's see, I was going to look at uranium and then I'll pass it right back to you for a few minutes. And here we go. You know, really it's been in a trading range here. Uranium has, like I said, it had a great day today, and that's why it ended up on the top of our ETF list. But look at this trading range, and right here, that is overhead resistance that you'll certainly want to be watching. I wouldn't expect much more out of this move. I mean, momentum is, while it's decelerating and trying to turn up, you know, it's just, this hasn't been great. It's getting close to some interesting support, but
what does the weekly look like?
The weekly looks like that.
Yeah.
And
Wow.
honestly, in the very long term, with that declining tops and kind of a flat bottom, even if you drew it here, that's a descending triangle, and those are very bearish. So we are near some interesting support levels, though. But I don't know. You know, honestly, you might get out of something and get a move, but when you're looking at something that's just really been in a trading range for years, I don't know. For me, it's not worth the effort. I think lithium was one. Also, you can see that sort of parabolic move going on, the same drop like we saw as far as the sector ETF, which of course makes a lot of sense, but a 3.5% gain. So this truly did turn out to be a reverse island. and we got the closure of that gap, and it does look like it's ready to head higher, but we're very overbought right now. And look at the margin there between the 20 and the 50 as it's made its way up in this parabolic move. So that is my little look at materials. I'm going to pass it back to you, Dad, and you can show them a couple of your grab bag stocks or charts.
Okay. One of the things I wanted to talk about today was I have been very concerned for a lot longer than anybody else probably, but I don't like the way the debt situation looks, and we had a chance to flush the system out with with real estate, except when they had the real estate crash 10 years ago, but the Fed basically jumped in and saved everybody's bacon. And I wonder if they could come up with a version of that to do when people lose money in their stock accounts.
There you go.
Right. I mean, that would be just about perfect.
Yeah, exactly.
But I've been following John Mauldin for probably about 20 years, and he was early. I was having misgivings, a couple of years ahead of the top in the real estate market, and he came in with probably better, more well-defined and articulated expression of that concern. But he is now talking about this current decade is going to be the decade of the Great Reset, which essentially is all the debt that's out there. It's going to get reset. So we don't know how it's going to get blown up or how it's going to come about, or what.
Yeah.
What kind of screwy method that
resolution
come up with to save bacon. I don't think there's going to be saving bacon. But I was thinking, well, what do you do ahead of this? What can you do to prepare for it? And honestly, in terms of investing, I don't have any great ideas. One of the things I believe, and this is just my personal opinion, but is clear all debt. Get rid of, pay off your credit cards, pay off your mortgage, your car, get it, work hard on getting no debt. Because if the crunch comes and you get out of a job, income gets cut, that's money that you don't have to earn if you don't have any payment. For example, if you have a $3,000 house payment, you have to make about $6,000 before taxes to pay that. If you don't have a house payment, you don't need any for that month. So it's something to think about.
Yeah, it's something you've definitely preached to me throughout the years. And
Right.
we did have a discussion with my daughter last week. the same discussion.
Right.
So, yes, honestly, that is the best way. And everybody says we're a little bearish, Dad, that we're too bearish all the time. When do we ever get bullish? I think I do a little bit more than you do, but overall, I feel like our job, though, is not necessarily to blow the horn and say, yeah, go and do this.
No,
but it's also it's to give you some insight. But we have to go. And so I will wish you happy trading.